Working? Yes, now it's working. Well, thank you very much to the audience for being here. It's a pleasure to be here one more year, and thank you for the organization, Energy Box, for this fantastic event here in Madrid. So without much further ado, because we are a large panel, and I think it's the most interesting part is to hear the participants speak. We'll just do a quick introduction and just jump into it. So basically, I mean, with an unprecedented demand for renewable energy and many projects facing challenges and delays around grid access, regulatory bottlenecks, and global supply chain concerns, the spotlight on securing competitive power purchase agreements, both for energy producers and consumers, has never been greater. So we have, by the way, prepared some questions, but we would like to have this session as interactive as possible. So we will ask the audience to think about questions that they would like to pose to the panel participants, and we would very much welcome your participation. So we'll start basically. How do you see the PPA market in Spain and in general? What is the appetite? Are prices coming up or down? Is it a buyer market or seller market?Maybe Jaime, if you can start.
Okay. Good morning, everybody. Well, just to answer this question, I would like to look back to the past in order to see the evolution of the PPA market in Spain. Well, as you know, it was first of all developed by the high-tech companies, and it was a clear buyer market. Then there was the Ukraine war and this geopolitical moment, and the market became more a clear seller market. And I think right now it's more stable. I think it's more balanced. I see opportunity for both sides. I think it's a question of maybe be more focused in the project, in the real appetite of every player, and there I see very good opportunities just looking to the PPA as a tool just to complete the portfolio management of every company, let's say buyer or seller, and also the needs of the technology that is developed and every part need. From Ventian, we have a big portfolio of wind energy. From our point of view, we must say that we see a big appetite for wind technology, for wind energy. And as we were seeing at this moment, wind is a natural technology complement to solar. So I think, and it's quite close to base load. So big appetite, good moment, and I think opportunities for everybody.
Great. Anyone wants to add to this?
I agree with you, Jaime. I think we should differentiate the technologies, right? PV and the wind. I fully agree with you on wind. Wind is now a very interesting technology. A lot of appetite that could be a more balanced market, so to speak. Even I would say perhaps a seller's market, because wind assets are a bit scarce in Spain and Iberia in general. But we need to focus. If we look at the PV technology, it's more of a buyer's market, if I would say, especially with the risks embedded. So the price is attractive, and we see that the long-term prices are low and very competitive for industry especially, but the risk associated make it a bit more difficult to swallow. Therefore, the interest is not that big on traditional pay-as-produced or solar profiles, right? So I like to make that difference. It's true that, I mean, and you're in Ventian are in a very good position in that sense, because you have a lot of wind, and now it's a very good moment for that technology. But don't forget that in the PV side of the renewable development, we are seeing a bit more of a buyer's market due to all these risks we've seen, the cannibalization. We'll talk about cannibalization. I don't want to introduce that topic because probably we'll just keep there for the rest of the session. But just to make that point, I think we'll agree on that.
Yes, Francisco?
Yeah, thank you very much. So let me introduce myself quickly first. So my name is Francisco, so I'm working for NTR since last year. So NTR is an investor and an asset manager in the renewable infrastructure space. So we have around 1 gig of installed capacity in commercial operations, 7 different countries across Europe. So in Ireland, UK, Sweden, Finland, France, Italy, and Spain. So we are basically deploying capital from institutional investors into renewable projects at different stages in development, and we have around 6 corporate PPAs in place so far in different countries. So we keep exploring PPAs for our renewable projects in different stages in the pipeline. So we effectively see the PPA market very attractive here in Spain in terms of pricing, definitely buyer's market for solar PV. And we see a massive penetration in the next few years on this technology, as we have previously seen in the screen as well, around 54 gigs of projects with permitting and environmental permit already granted, and therefore coming online in the next few years. So we have seen gas prices as well falling down since August last year. So all of that driving prices down. However, we also see some positive aspects here to offset some of those points. So we see more and more demand coming from corporates from other regions in Europe, which are very interested in entering into PPAs here in Spain. We also see demand for potential demand growth for electric vehicles within the next few years. Probably the timing will be the key to see how much all of this is going to offset the massive solar PV penetration in Spain. Right? And we live in a time, as Jaime was mentioning, very uncertain moments for the following few years because of the uncertainty around gas supply issues following the war in Ukraine and the shortage of the gas supply via pipeline from Russia. Therefore, we are much more exposed in Europe to LNG market and the volatility in the gas prices. So we'll see all of this affecting, and I think it will make PPAs even more attractive for both sellers and buyers to have more certainty about the pricing and the cost or the revenues in the next few years.
Great, thank you. So just looking at recent trends in the PPAs, I mean, in your experience, how are PPA terms changing in recent years? I mean, in terms of price structure, tenure, or the conditions, how is it possible to align interests of buyers and sellers so that the negotiations can be smoother and have a higher chance of success? Eric, maybe if you want to comment?
Yeah, thank you, Jaime. Honored to be on such a great panel, and thank you, EnergyBox, for having me back a second year. Okay, so when we start looking at the PPA market, we've seen a drastic shift towards shorter and shorter tenors. People are going merchant to a larger degree. You know, when you can make so much money in the market, I spoke to a client just this week who said, well, you know, we're 50% merchant in our portfolio, and we're happy about it. But, you know, there's quite a bit of risk out there when you're merchant in solar. So that's clearly a trend. That you know, the income or the revenue is so high, and people are just taking it. But it's a little bit short-sighted when you could have hedged you know, long-term PPAs at, you know, 50, 45, happy days for 10 years. You can just relax. You should perhaps do that. I think another trend that we're seeing a lot is, obviously, you know, Fernando and the rest of the off-taker community are hesitant about profile risk for good reason. And so we see structures moving firstly now towards solar profile, fixed solar profiles, but perhaps later to other structures such as the terrible B word, baseload, which I know many here do not like. You know, and that's why, you know, the presentation that we saw before is also very important to start introducing hybrid PPAs integrating flexible assets on the grid, integrating dispatchable electricity to the grid so that we can increase those capture factors, making them hybrid capture factors, which we at Pexa Park obviously follow. Another thing, just an interesting little news tidbit, Montel went out with the news the other day saying that the generation tariff was coming back, which clearly was incorrect. But looking at the trend there, we all remember these generation tax adjustments in PPAs from several years back. Now we're not seeing them anymore, but should the government start introducing them again, I mean, that was a trend that we all put a lot of effort into putting in all of our PPAs, and now they're just gone. And should there be an adjustment, I think Fernando would be not so happy, right? Anyways, yeah, and corporate PPAs, I mean, back-to-back, we're doing many more back-to-back deals. The off-takers here are sort of, you're selling it downstream, so you're not hedging as much in the term market. Clear trend, and I think with that, I think the corporate off-taker genius here would be Iban. No, so do you have any comments?
Yes, thanks, Eric. I guess corporate genius may be too big, but all right. So I'm working for Schneider Electric. Our role is to support our customers, corporate only actually, today in their journey to PPAs. So what we see today actually is corporate searching for two goals. One is definitely the very strong pressure from all their ecosystem, shareholders, market, customers, suppliers, governments, to decarbonize their operations. So we have not talked about it a lot today, but indeed, these PPAs are a way to decarbonize operations, to be green, and to be supported appropriately by all this ecosystem. So we need to take into account these dynamics into what our corporates are searching, but at the same time, and we talked about that quite extensively, energy markets have become extremely volatile recently, and consequently there is a need to hedge prices. Right, so we had a very interesting opportunity highlighted before about how to hedge with storage capacity the huge spread we are seeing right now in solar markets. Well, this risk needs to be taken into account. Definitely a corporate can't be tactically exposed to a 50 euro spread every day in their operations, and very few of these have a perfect match profile with solar production, right? So today we need to answer this trend of how to manage production versus consumption profile, which is definitely an important topic. So we heard buyer market in solar projects. I would try to not support too much this perception. Maybe I'm based for sure, but all the good projects are facing huge competition among corporates, and financing conditions are very strongly scrutinized right now. Basically, to find a nice project and to be able to compete for a pretty good, attractive solar project, a corporate has to show either very strong credit rating, slightly above investment grade is actually pre-limit, or a very high level of credit posted through a bank. So that's one competition they are facing. Second one is definitely very few wind projects, was highlighted by several of these panel members, and bundling these two technologies is definitely a way to answer both of these challenges corporates are facing today.
Great.
If I may add, it's true, and just to comment on the off-takers' appetite, and in the end, we don't forget that we need not to forget that this energy needs to be consumed. I mean, us PPA off-takers are just a mere risk managers. In the end, we would just hedge and manage those risks and warehouse the risks that the producer doesn't want to have, really, which is the price risk in this case, and also profile risk. But in the end, we need to find ways to finally offload that risk somehow, right? And if the end consumer, as Ivan was telling us now, is more and more aware of profile risks, we are seeing that trend that there are very few of the producers who are willing to pay for pay-as-produced, and if they are doing that, they're asking for a very, very competitive price. So we cannot do magic in that sense. We can warehouse risks at a certain price, of course, but in the end, the final appetite and the final trend settler would be the consumer, right? So that's why I think Ivan's comment in this case is very valid, and it's really something we need to all be aware of, that consumers are having a lot of interest in PPAs, but they're more and more aware of the risks, and they want to enter only the most efficient and most interesting projects, right? And just to make a brief introduction, because I don't know if you all know Axpo, we are PPA off-taker, we are also PPA provider, we are basically risk managers in the power price curve, and well, that's why, I mean, we are in both sides, and that's why they were asking me about the off-taker's opinion, basically.
Yes, Francisco, you want to add?
Yeah, thank you. So I would like to highlight as well the role of advisors when transacting PPAs, such as Eric or Ivan here. So advising both sides, sellers and buyers, especially when there's no previous experience when signing PPAs, is also very appreciated in terms of timing to speed up the whole process. I think the engagement, another couple of points to bear in mind: the engagement of the senior management members and committees as soon as possible in the process can also facilitate and smooth the process, and also a clear view on the terms of the deal right from the beginning, in terms of pricing, structures, terminations, credit supports, liquidity damages, and all of that right from the beginning can help as well to move quickly or relatively quickly, because we all tend to move much quicker at the very beginning, you know, and on our minds and on the spreadsheets and all of that. When it comes to reality, normally takes much longer than expected.
Thank you, Francisco. Eric and I did not ask him to say it, so it's good to hear from people on the ground.
We agree, right? Yeah.
Yes, thank you. I mean, it takes two to tango, and it takes two to do a PPA. In this case, probably with the advisors acting as the priest to bless this marriage, which is a long-term agreement between the seller and the off-taker. So yes, it's great to have a mixed panel so that we can get everybody's point of view. So moving into a bit more controversial or difficult aspects, I mean, we've just heard about the battery storage. So what about the PPAs, including battery storage? What are the main challenges to address, and what is the difference with traditional PPAs? Maybe Francisco, if you
Sure.
can start.
Yeah, we see a few main differences when comparing versus traditional PPAs or renewable PPAs here, typically in Spain, solar PPAs, right? So we see here the profitability is mainly driven by the power spreads between lows and high prices, right? And the opportunity to optimize that spread. Similarly, what the pumping storage is normally doing for quite some time. So there's another revenue streamline which is really relevant here, which is related to the ancillary services. So here in Spain, primary frequency response is not remunerated, but others such as secondary, tertiary, and other markets which are also have a high weight on the revenue stacking there. And that's something which is a little bit tricky because of the swallow ancillary markets. So what we have seen in other countries, more mature battery countries, such as Germany or the UK, due to these swallow markets, the likelihood of getting cannibalized quickly is also higher, something to bear in mind. And then the technology as well is something quite different here. So we normally define the life of the battery as a function of the number of cycles of charge and discharge the assets. So and that's basically driven by the shape profile of the power price in the wholesale markets. So if we are managing the battery with 1.5 cycles per day, probably the life of the asset is going to be 15 years. However, if we increase that cycles up to 2 on a daily basis, probably that's limiting as well the life of the battery down to 7-10 years. So there's a strong component on the opportunity cost there to decide whether use the battery today or tomorrow, basically on the level of the power price spreads. And then there's also a need to have quite advanced models for the different cross-market revenue stacking. That's something also to bear in mind when managing batteries. And there are a couple of, the main challenge at the end of the day, I think, is to put the business case. Here in Spain, we cannot really rely only on the spreads in the wholesale power markets and the ancillary services, so there's some missing money on top of that in terms of capacity payments or upfront payments required to have more certainty around the returns on the investment. And we see here different structures when it comes to PPAs or hybrid PPAs here. Basically, we have tolling structures. We have seen also in other markets. We have floor prices. We have profit-sharing mechanisms. And what we see also in other markets, more mature markets, is that sometimes high premiums when contracting tolling structures can kill the economics of the project. So that's why we see probably the profit-sharing mechanism more attractive. Of course, this is not probably the best case scenario for financing purposes, so probably more equity would be required for this kind of investments in the short term.
Eric, I see you nodding, so you sure?
No, I mean, as Pexapark, we've done 2 of the early battery PPAs, probably the first ones in the UK. And we've also developed a very clear model that essentially can calculate revenue, because really that is the most difficult part of the battery investment, understanding your risks, because the revenues are very uncertain. They come from the volatility, and they come from regulations and capacity markets. Now, luckily, we have 2 of our battery modelers here in the room today, so happy to introduce you to them so you can discuss. I see them not super happy with me putting them on the spot. And other than that, the understanding the risk, very, very clear difference, but also, as you mentioned, the different structures, they're very different from the PPAs in that if you have a revenue sharing mechanism, you have to understand the revenue. If you want to understand the revenue, you have to rely either on the projections of somebody that you're contracting, who's obviously going to say that they're going to make a lot more money than, potentially they are. And you're relying on so many factors. You're relying on the supply of batteries. You're relying on the ability of the regulator to keep a steady regulation or adapt, which in Spain, I'm sorry, I'm not too big on. And you're relying a lot on the capacity market. You're saying earlier here that the spread is very important, but ultimately, in the UK, for example, in order to invest in a battery, you're really looking at the capacity market at this point. And so then you have to model a capacity market which is run by a regulator, which is also very, very tricky. So that is really the big issue here. We can all see the need for batteries. I mean, if you're looking at a PV investment in the US, there's no PV investment in the US that doesn't come with some storage, because you have to have it. It's just no investor would ever buy your project if you don't have it. And I think we need to think a little bit like that in Europe as well. The future is clear that there will be more cannibalization. Sorry, I bring it up now. We have to come to it at some point. And so if there's more cannibalization, we need the batteries. So ultimately, somebody's going to have to be the first mover. And with the first mover, there should be a first mover advantage. And we just need Miteco also to get on it, to actually create the capacity market. Yeah.
Great. So,
hi everyone. Thanks for having us once again. I think Jaime and me here we go all the way back to one of the first PV box at the time, right? So we're very happy to be back once more. I think I just wanted to change the style a little bit, where we seem to be all saying it's extremely complicated, and it sort of is, but at the same time you can simplify. Just one thing to bear in mind is the sequential nature in which the electricity market is actually organized. for us to all basically remember that there's a day-ahead market, which is the one that we've seen a lot of slides on, and everyone talks about that particular price as the headline price. But just bear in mind that that one is closing before any of the other subsequent markets come into operation. So you are in a perfect position to have a vision of what the prices will be tomorrow. By about midday today, tomorrow, we will know more or less what the shape of prices is. So whilst it doesn't help us think about how we finance a battery project, we certainly know that it's very feasible to understand how you would operate a battery project once it is up and running, because you have a certain degree of visibility as to what may happen in the future. We know I know for a fact, you can find out for yourself as well, that if you don't have a battery, you can still make money on the electricity market without any generating asset whatsoever, just by playing day ahead and intraday markets, okay? So if you have an asset-backed a possibility when you have a battery, you should be actually in a position to leverage that further, right? So then one other thing, here we don't have a frequency control market, but as we said, the shallowness of these markets is what's destroying, well, effectively leads to cannibalization, places like Germany and the UK, in the same way as we talk about cannibalization of solar here, right, in the middle of the day ahead. We don't have that yet, porque a red eléctrica no le interesa, because everyone is basically forced to provide it. So as long as there's a few combined cycle power stations and big nuclear units providing that inertia, they really don't need to introduce a market of that nature. On the secondary and the tertiary, which is basically, you know, automatic FRR and MFRR, you know, there are values there, but which are extra. You can put them to the top. But at the end of the day, making projections are extremely hard, right? And I'm one of the guys who prepares them. So having a view on that is really. But to be honest, you're putting your finger in the air. But to be honest, you have to really think in the context of what's viable in these markets. And one of the other ones is if you can operate a battery to make money, and the simple answer is yes. Now the question about that is who's best placed to provide that service, and one of them would be standalone battery on the grid. The other one is embedded within a generator, a renewable generator. And the third one is whether we have them at home. So your battery should actually be on the consumption side, within the fence, if you will. And that really depends on a number of other characteristics which are reflective of the regulatory landscape. So, you know, just bear in mind that whilst it is very complicated to think how do you integrate batteries, you know, there are a bunch of tools out there which you can readily access to give you a feel for whether it makes sense or not. It's not really that complicated. But again, if you want it complicated, you can go that route. If you want it a bit simplified and get the sort of general aspect of what's going on, you can also find a few rules of thumb that will lead you to a more sensible solution. Just don't get overwhelmed, because this is something that we have to integrate into our thinking. Just one other thing about batteries. They're not going to solve the medium long-term problem of storage. If you recall, Q2 this year, prices were very low. Everybody freaked out. Admittedly, had to do some to an extent with the market projections of different suppliers. I've always been quite conservative, by the way, which is why I'm not getting a lot of transaction business these days. So, but now they're moving towards my curves, and everyone revised their prices, future forecasts downwards. And what that meant is, and it coincided with low prices in Q2, and then the PPA market started seeing, you started seeing prices coming down there as well. I think that's quite interesting, but what's the particular point I wanted to raise was, it was Q2, right? And a lot of people are thinking, what does that mean? Relatively low demand across the whole of the year. Plenty of hydro, relatively speaking, is being dry, but the hydro appears, there's still wind and there's still solar. So you get a perfect storm of low pricing in Q2. There is no way in which batteries solve the problem of buying Q2 and selling Q3, right? Just to be clear. So with respect to that idea that, thinking lithium storage type battery solutions are a panacea, If the other one is, if demand is not there across the whole of the system, something that I spoke about in a webinar yesterday with a few colleagues, Info Energética, little pitch there for you guys. Follow us on LinkedIn. So if you look at that one, it's like demand hasn't really been there. And at the end of the day, if we don't start electrifying the rest of the economy, it's going to be a little bit problematic. Again, battery is not a solution to that. All they can do is help load shift. Shift supply from some hours to others. Just a few thoughts. Now, again, I'm not trying to make it too complicated.
Okay, yes.
Thank you, Kim.
Fernando.
I mean, you need to hear Kim because he's always very accurate and off the charts. So very out of the box thinking in that sense. It's true. It's a very complicated optimization of batteries. You can optimize or you can try to extract value, that's true, and that could be easy, but optimize and maximize the value of a battery is not that easy. There are several markets, you need to understand them, and what's more difficult is to forecast the value, right? And when you're trying to develop a project, you're looking for financing, bankability, the more you fix and bring value to a certain and a secure figure, then the higher the chance you have to finance and develop in the end the project. So in that sense, our opinion is leave that optimization to the market players in the end. No one understands the value of the battery, of course, and that's where Eric and other consultants can help you with. Especially Pexa Park, they have a very quantitative approach, so it could be a good way to start. And then leave that risk to the market players. In that sense, you can, or you should try at the beginning to look for a kind of a tolling structure, or in the end, an extra capacity payment. If you think of it as an alternative or an addition to the market capacity scheme that might be coming online soon, hopefully soon, or hopefully at some point. But the more revenues, you have to keep that in mind, the more revenues you secure, the easier it is to secure financing and then develop the asset. And of course, for other markets, probably those tolling agreements might be easier, or you can even separate tolling agreements for day-ahead markets, for instance, which is more risk manageable for market players, market participants, and the other uncertain revenue stacks as ancillary services, where there's no real market to hedge or things like that. That could be a profit-sharing structure, for instance. That's what we are trying to push, for example, from Maxpo for batteries, trying to secure a big chunk, which is the day-ahead market, what everybody calls arbitrage, and then try to look for a profit-sharing structure where we as managers, energy managers of the asset, are incentivized to optimize, and we have the experience and the capabilities to do it. So that's something you need to bear in mind. And it's true also that batteries are not the only solution. Batteries are short-term optimization, but you need to think of other technologies. That's why we should call it storage instead of batteries. There are other technologies, even heat storage. That's a very interesting solution, because we need to, as Kim already said, we need to bring demand into this as well, right? Without demand, we're not going to be able to solve this cannibalization issue.
Okay, thank you. So it seems the elephant in the room is also cannibalization. There's a few mentions of it already, so let's deep dive into it a little bit more. So what's your view on price cannibalization in the long term solar PPAs? Is hybridization the future, Kim?
First step, yes. Okay, that was the end of the answer. Let me elaborate a little bit. Jaime mentioned the idea around why wind looks like such a good idea, especially when you think about it relative to solar. Well, we know that there's a lot of solar deployment. Wind's trickier by definition to get off the ground. But if you have an existing wind farm and you have a little space on the side, I'm exaggerating, but just, I'm an economist, I'm not an engineer, so from that perspective I can draw simple caricatures for the rest of us to understand. So you basically put a solar farm next door to it and you connect it through the same substation. Then the thing that really matters is what's the correlation or lack thereof of the wind resource and the solar resource. And if you look at the national level, you don't really get a feel for that. If you look at the national figures, I mean. But if you look at location specific, you get the blindingly obvious things that you come across. So yo hice geografía en el colegio, right? So I did geography O level. I'm giving slightly my age away in England, right? So if you think about the sun shines when there's no clouds. When there's clouds, there's a low pressure system. When there's a low pressure system, it's raining, right? So you get, by location specific, you actually get a nice degree of complementarity between the two. So if you're actually looking to have a particular, if you have a certain amount of connection capacity to the grid, and you add PV nearly to the same extent as the wind. So if you have 100 wind megawatt and you add 100 PV through the same site, you'd imagine that you're cannibalizing 25, 30% of your simultaneous energy. So you'd always be restricted, and the answer is more like 5 to 10%. Mucho menor. So if there's costs that you can save on that, definitely hybridization is a way forward. It also goes to the point about financing, right? If you go to a bank and explain to them, well, basically looking to add a known technology through credit committee where they've already approved projects with another technology which has also received technical and regulatory approval from the bank perspective, and you say, well, we're just going to join those together, you'll get financing relatively easily, right? And you haven't talked about batteries, which are yet to make a business case for. So yeah, so I think the hybridization is a particularly interesting first point of call. Again, it's not a panacea, and there are circumstances. I mean, I've worked on some PPAs where we haven't talked a lot about volume risk, but generally the easiest way to hedge from a buyer's perspective or your market intermediary perspective, if you sign a PPA with someone and they're pay-as-produced solar or wind, let's think about wind in particular, since Jaime mentioned it being relatively baseload, I totally agree on that. But if you look historically, there are periods where there hasn't been any wind, and where it's been extremely low for a whole month. And if you signed a PPA and your contractual is basically a base load, you're going to have to end up buying from the market to clear your PPA position. Te va a costar caro, right? So that you're going to be out of pocket. So just be aware that is, again, there's not panacea, right? Again, would batteries help you in that? And the answer is not at all. I mean, if there's no resource for you to recharge your battery, you know, you're going nowhere as well. So be aware that there are some other degrees. It's not, you know, if you did have a lot more PV, you would have produced more with PV. I'm thinking specific. I think it's December 21 is what I'm thinking in particular in the back of my head is there was very little wind across the whole of Spain, by the way. So it's a very interesting anecdote to point out and talk about volume risk in that perspective. But generally speaking, the instantaneous point-to-point, does hybridization work? And the answer is yes, and it certainly should be easier from a financing perspective. And not just because I say so, but if you look at countries that have pushed this line pretty hard, look at Portugal. Well, Portugal has been quite quiet about it, but basically a lot of the incumbent wind generators, quite well established, still being paid under a PPA structure or feed-in tariff, if you will, with the government, they're thinking about their feed-in tariff expiring, and they're beginning to put a lot of solar, co-locate solar with their wind farms. So it's not just because I say so, which is all wonderful, you know, you can always pull a black box that'll prove anything you want, but there are people who are actually doing it, and I think they're onto a winner with respect to that. Obviously, there's the facilitated aspect that it's difficult to get a connection point, so if you already have one and can extract more value from it, even better, right? So yeah, I think hybridization is a more obvious first step to try and balance your book. Again, not a panacea, but certainly part of the mix.
Okay. Anyone to add?
Yes.
I mean, I think a good thing. Oh, sorry. Did I? No, I cut you off, clearly. Go.
Just following very interesting highlights, I would like to share with you our experience. We have a Madrid portfolio that, by the way, is not in Madrid, it's in Valladolid and Palencia. And we have a co-location project for the near future. And location is very important. There we have a very good match with the seasonality of wind and solar. And this is a good point just to solve, as you said, the big question about quarter. I mean, we have a good match in summer where wind is decreasing and solar is there. And also then we can just reach the base load without the premium that this volatility in the market is right now. And of course, there are another advantages like the optimization of grid connection, other maybe social problems in the area, and it's a more long-term, let's say, solution. So that is our clear bet and the trend that we see with our wind site and location. We can put more or less solar in all of the site. I think opposite is more difficult, just to put wind in solar side. So the point is that it's still this hybridization project for PPA structure is a little bit new, green. Maybe advisor, they have also room in order to educate the corporates, the off-takers, in order how to see the real value of that project, and also how to minimize the risk and take advantage of this natural mix with technologies, wind and solar, and I think it's an advantage also for the market because there will be less energy loss in the system. Permitting it will be easier, and I think that's a clear trend that we see, and it's the way that we are looking to the future.
And Eric, maybe just to finish.
Yeah, no, I just wanted to make the permitting point, essentially, that it's kind of hard to get a grid connection agreement at the moment. So if you have space, why not go that route? It's a much easier thing to do. You don't have to wait so long, and you don't have to spend all the resources going through an environmental impact assessments, etc. So it's just that's a case for hybridization that the Spanish government actually did very well. Yeah, that was it.
Okay, so I'm afraid we ran out of time. I hope the conversation was very interesting. I'm sorry we didn't have time for questions, but we'll be around. So please come to us and shoot your questions that you may have, because I'm afraid that we are now being pressed to move on with the rest of the event. Thank you very much. Thank you to the panelists. Thank you for the audience. Thank you to the audience, and see you around.